Hey everyone, welcome to your daily update for SOL and BTC. Probably won't cover too many altcoins today just because the structure of them, looking at them, is completely stuffed up really for doing any kind of short-term trading. Might as well just wait until we get weekly close and then just see how different levels change. But we will look at ADA because someone requested that, and we're having a look at Tesla because it seems to be a very popular point. Everyone wants me to look at Tesla all the time. So let's just start with liquidity. So people are longing Bitcoin. I don't know if that's a good thing, just given the fact that markets are greedy and it's just as easy for us to go down again as it is for us to go up. Um, Sol, like most altcoins, looks pretty wiped out on the daily, but people are still pulling or putting some long bids in. You can sort of see it more on the low time frame liquidity chart, which we'll show you in a sec. But uh, when looking at Bitcoin on the daily, that 114 level, so that was the key level really. And I think if we hadn't had such a huge cascading sort of dump and completion of monthly events, etc., then that's probably the key level that all the high time frame support kicked in at. But given it is high time frame support, it could spend another day, week, whatever before it even goes back up there. So, and it'll all come down to pretty much whether people stop longing it or whether the bags get filled up. It is also possible that it spends too much time around here, maybe goes up and retests the underside of it as converted resistance, and then just dumps, and then you pretty much know you're in the bear market. If we don't get over that level, you might as well pack up and consider that this is actually the bear market. Sol 188, 189 was sort of like the key level where most of the high time frame support exists. But the actual monthly range, basically is from about 120 all the way up to about 234. So we bounced off the rough area of the monthly hold and the monthly trend, which we'll have a look at when we get into these charts. So maybe that means we don't see the bottom of the range because the whole point of a range is that a range should either ladder up or ladder down. So if the bottom of the range is about 120, 120.4 or 120.5, and we bounce off the support levels that are sort of between 140 to 150, then that could be that next step in the ladder on the monthly, and we may just continue up from here. But what we really need to see is some high time frame structural closes, and we have got a couple of important ones today, and then obviously got the weekly. There's also a bit of a tin hat thing, which I've talked about in the Discord with a couple of guys who like to count count candles or whatever, like time frame between events, and we close the 71 day today, and pretty much 70-day is once you get into the sort of like those 70-day numbers, you're talking the biggest factors of a year that can be evenly divided into four, and it takes four to create a range. And it's just really odd that on the 70-day events is pretty much when we see Trump pumps. It's when we see the dumps. It's when we see some of these really big events. They always seem to pop up when we get to that 70 mark. So I don't really understand what that means, but what I know is that if you put a line on every sort of 70-ish close running from the beginning of a year to the end, these major reversals tend to happen around that time. So someone else smarter than me can figure that one out. Okay, so looking at the 7-day, it looks like it's pretty well wiped, but there is still liquidity there that they could take a little dip down to get. And the upside numbers, unfortunately, they haven't really changed that much. We're not looking at piles of 7-day liquidity all the way up to, 260, 300 or anything like that. And even on BTC, it sort of shows the big spike there would stop at about that 120.3 area. And that is the thing that really is of quite big concern, is that if we are going to construct high time frame resistance at 120.5, which is the the area that we've failed to overcome the break on many time frames, then the next time we pass through that, it pretty much could just be the blow off top. It could just do an instant rejection off it because these are these are levels that when they develop in a certain way, you can pretty much just short them to the cent. So we either do a blow off top through that level when we hit it, if we hit it, or we reject off it to the cent, and then that's the end of the range. It really has to get above that and close above that if you want to exit the top of the range sustainably, and it needs to do that, preferably next week rather than, or at least get over it next week and then hard close it the one after. But if it doesn't do that, then it's just reinforcing it as resistance that it fails to accumulate back to. Okay, so then looking at the 30-day. So 30-day presents pretty much a story of, if you were to go to 130, it's all gone. But as you can see, a lot of these positions actually survived, and I've been putting a bit of thought into that. They didn't survive on altcoins. As you can see, they got completely evaporated. But on BTC, they did survive, and there's been some really interesting chat, popping up on X, and the mainstream people with 100,000 followers are just talking bullshit and so on, as they would. But there's been a couple of really smart things mentioned in the comments, and one of them was that there was a huge push towards unified trading accounts recently, and I remember getting approached by the exchange, and they were basically just offering greater rewards, greater fee, kickbacks, all this kind of stuff if you converted your account. The thing about converting your account is that any spot assets that you have sitting in your spot part of your account then become collateral for any futures trading or leverage trading you're doing. And I think I don't know how many people would have converted their accounts. At the time, I didn't bother even to consider it because I was in positions, and one of the things you had to do was close positions to actually do the conversion. And then after that, I just ignored it. And yet now, if a lot of people had actually done that, then every single thing in their spot bag was then just a sellable event when their futures trades went into liquidation, because they all would have been collateral. And the mechanism to do that would have sold those spot assets on the open market. And some of those assets, there just really wouldn't be a lot of buy orders for in the order books, because they'll just be things that people have been sitting on for a year, 2 years, whatever, and they're just hoping one day they go back up, and etc. But without any orders in the order books, when those things got sold, wow, you could literally send some of those tokens to zero if there was no real buying volume. So it's an interesting thing to sort of mull over, that whether it was organized to do that, and it was a means of wealth transfer from all of these people sitting on zombie coins, into the big players who just really wanted to short the market, or whether it was just completely by accident, because legitimately they were trying to make people's accounts easier to manage by having everything unified under one thing. It's really hard to say. But what it will have done, if it is the case, is it would have put a heck of a lot more money that's now in the perps wallets, effectively, of the people who won, out of the last couple of days. And they might use that to actually buy better assets with it. So do we see another big push up on Bitcoin? Who knows? But I don't think it's when everyone says that there's $19 billion worth of liquidated funds and that's out of the market, it's not really out of the market. It's just changed hands. So we now the big question is, what do people do with this? So we shall see. Let's have a look at some charts before I just continue to rant on. Or just before the charts, actually, having a look at this, what you can see is that people have been placing their bids on BTC. So ever since that mass liquidation event, which was sort of back around here, people are placing their bids. So now there's reason to dip down to 106, and there's reason to go up to 116 again, all in the short-term liquidity. SOL, same thing. There was reason to go down to that sort of 170 area, and there's reason to go up to the 195. Again, just on that short-term liquidity. But I don't know if you'd want to bank on it bridging this gap between 195 and 207 very quickly. The exact same thing that's been happening as they've been pushing the price down can happen in reverse. They can come up to this sort of 190s area, take some liquidity, go sideways for a while, build liquidity or bake the cake as we call it, fill this gap and then continue to go up. So just because we've had a big dump and everyone's really super bearish, there is some signs that, particularly that they've just taken this lower part without taking that upper part, sort of points a little bit to, if we do have some positive structural closes today in the next few days, then all this could be is a big deviation. It may not be a downtrend starting. So just have to keep an eye on that. Now let's look at these charts. Okay, so looking at SOLBTC Strength on the daily, yeah, it's not exactly in a great position to close the daily. It's possibly holding the break level. It's possibly holding the range trend, but it will be under the main trend. So really you want to see this climb back up just above that 16193 area. So it's above that main trend. But if it does stay inside the actual range, kind of where it is now, then it's not the end of the world, because you basically have the bottom of the range and you have the range trend, which can push the price back up because it hasn't hard closed the main trend yet based on that. There would probably be some deviations in that trend though, so you could try running it from different points. So if you take it from a closer swing low, then you're actually still technically above the trend. So this is one of the tough things about using standard trends, is where exactly do you array them from or draw them from, because you can get very, very different results depending on where they actually are. So as you can see, if we run it from this swing low, then what you have is you have a deviation of trend, and what that actually means is that the next candle moves the trend, which could be there. You could then sweep down here and bounce back up. So yeah, when you get stuff that just drops so rapidly like this, it kind of makes it really, really hard to actually figure out the where the lower time frame structure resides. But I must say, being able to drag a little line around like this and have it do it all for you is considerably nicer than having to sit there and count through candles like I used to. Okay, so let's have a look at the weekly, because that's getting very close to closing. So weekly is not actually breaking anything. It's still holding the hold level. So this is not like a full engulfment, but it is still a hold candle. And so effectively the weekly is still holding the hold level. It has gone back below some of the key the origin levels, like this level up here on the daily at 17770. Sorry, not 17770. What is it? It's 16799. So that is actually a daily origin level. So you don't really want to close under that. You want to be above that. Sorry, weekly, I should say. We're on the weekly chart now. So we really want to close above that tomorrow. But as it stands at the moment, it's holding the hold. It's inside the range. It did obviously have a pretty solid rejection off the break level up there at 1.9, but really that started when it hit the range trend up here at the 1.2. So that was when everything was getting very, very, very bullish on SOL, and failure to hard close above that break has just led to a complete fall. Now, the thing you'd want to be careful of as far as potentially being the end of this whole thing is this level here at 19012. This will be the first weekly candle that has failed to actually accumulate back to that trend. Back to that level. Now that becomes high time frame resistance for the strength of SOL. So one of two things can happen. It can recover it, break out to the upside. You see an alt season on a weekly basis. The other thing that can happen is if the price even comes back near that thing, then that becomes high time frame resistance and you get a big rejection. So likewise, we may never even see that level again. what we might do is we might spend the next week not accumulating back to this 1770 level. And if that's the case, then guess what? That becomes your high time frame resistance. So, the market's definitely not out of the woods. But at the same time, until you actually break 14125, you have not actually broken the weekly range. So, and the ladder point could just simply be where we are now. And the next event could be it comes back over this break level, which is a hard close break level, and then maybe it gets over the origin, triggers it, and just blows through all the trends. So you'll see that when we look at the USD chart, or let's just skip forward so that you actually get a bit of an idea of how that happens. So here, okay, 6.57 was that origin level. It was created through the touch, the rejection, the non-accumulation back to it, but then we bounced off the bottom of the range, we bounced off the range trend, we got up above it, and then just it explodes. And unfortunately, when this is stable dominance, it's not the kind of thing you actually want to see, but it is, it is what happens. So looking at the SOLBTC monthly, the monthly is still in the whole candle. The monthly hasn't technically broken the trend yet. There is absolutely no reason why this monthly couldn't move up a bit in the next 20 days and then move the trend and then bounce the trend and stay within the range and go up. So, we're not actually dead, to say the least. The bounce off the wick of that monthly candle is actually quite bullish, because bouncing off wicks is a lot more bullish than going deep into bodies. So it shows that there was a lot of greed, there to make this purchase or make this buy. So yeah, I wouldn't, it's got 20 odd days to go, but that's not exactly bearish. When we're up here, yes, we were being bearish. We're down here, we're actually looking like we might be going to move to being bullish. So, and 3 month. So the 3 month hold candle is actually higher than losing the weekly or monthly ranges. So you've got sort of a support in the form of a hold candle sitting here at a higher level than losing those ranges. So that's also just shows that even if you do get a little bit more downside, there is still support there. So let's have a look at these safety. I might have paused that before I said safety assets. Okay, so yeah, so we exploded out of that origin area like what we just looked at before. If we close this candle down for the day, then there's pros and cons to that. So obviously the pro is that we haven't hard closed those lower levels, and that gives a bit more gives a bit more of a chance for this thing to actually continue down without having another sort of bounce. Another pro is that these non-origin levels that are at the top here, they will all convert. So basically this 68.2 through to 69 area, they'll all become high time frame resistance. And we already had some there, which was quite good. Also, you'll get conversion of the 70 area to high time frame resistance. We haven't got back through the range trend or closed over the top of it, so we're not risking breaching this upper range. And we've got several trend retests we could do to the downside. We've got range trends that we could do retest to the downside, plus we haven't hard closed anything. So I guess the key point here is nothing is hard closed, right? But we are failing to accumulate in dominance back to these levels. So we're actually putting more resistance above us than what we're actually gaining as support below us. So the next few days obviously will be critical to this if it keeps bleeding down. What is happening is we are getting a new interior support trend that'll pop in, and so where is that going to be? That is here. So we're going to get that. Now, when we get that, if we do come back to that 67.12% area, or even if we just retest this prior broken trend, which is a bit lower down at like 66.75, it may try to find support there and then go back up again. But once again, if it does not close the next day in accumulation, none of this is hard closed. And if we break that trend, we will start to head down, and then that's first you've kind of got to have a trend, and then after you have a trend, you can break a trend, and if you break a trend, you'll move to a horizontal level or another trend. So, and all of those levels are back down here. So, this either becomes a big deviation, creates more topside resistance, and then you get down, and if it goes down, it's going to look to try and break the lows again. So, yeah, all we can really see is how that plays out over the coming days. So the weekly, the origin level there at 68.49. Wow, it got all the way to the trend. Nuts. So this thing just exploded. It recaptured the range trend. It got over top of the resistance trend, and it just moved straight up to the other one, which is an epic explosion of dominance. However, when doing so, it was going straight through some very high time frame resistance. So we're back down under that now. We're not really hard closing anything, but we are generating high time frame weekly support at 63.79, which was already the case actually looking at that. So yeah, if this is to push back down again, pretty much your weekly range is going to be there, which is 63 to 68, and we might be shifting that interior trend to the top side for extra resistance, but basically this is looking like it could pull back. It could find, there's several areas it could find support at, but you'd probably get rid of these. Nothing is actually hard closed above the 66.18 level. So yeah, the range trend or the prior broken trend on the weekly would be, and it's more likely the range trend would be the things that it could come back to. If you get another week without reaccumulating to these upper levels, then they just become even greater resistance again, really, to cause that rejection down. If we start to close above those levels, well, it's game over. Okay, looking at the monthly. So the monthly pretty much shot up. So this is a key sign, really, of what's just happened. Most tokens, when you look at them, tested some form of monthly structure, and so this just bounced. To be honest, I can't even really tell you what that bounced off. Not at a quick glance, anyway. But it but I can tell you what it targeted, which was that monthly hold up there. Now it didn't hit the monthly break, so that is not moving to the upside. It's fallen back underneath this monthly trend. Realistically, a lot can change in 60 or 20 days, but that particular place that it's at now, that prior broken trend is bugging me now. Wonder what that bounced off, but whatever it bounced off, maybe nothing. It is basically looking for, what are we looking for? We're looking for a move back to 59.78%. There's no other, maybe that. I have to spend a little bit more time on this one to see if I can figure out what that actually bounced off, but it's laddered up. So that's a key level there at 62, but it never really got to 62, so 62.8. So yeah, I mean, if that just continues to reject, it's going to go to a lower low than where it is now. Okay, let's have a look at these totals. Okay, so on the daily, we should end up shifting the daily trend today. And sometimes this is a way easier way of actually creating a move rather than trying to get up through all of that resistance and then battle through all those trends. Sometimes the easiest thing to do is actually to spend a day creating a new downside wick and moving the trend. And when that happens, what would typically play out once the trend is moved is you will test the trend and then you could push up into one of these horizontal levels. Now, it doesn't guarantee you're going to get through those horizontal levels, particularly because some of those are very, very key levels, like from a daily market cap perspective for altcoins. You know, this level coming through here at 1.52 was the support of the upper range for a really long time. So, you know, to be able to actually blast through that like it has, it doesn't necessarily mean it's going to be able to get back up above that very easily. But, you know, hey, if enough shorts pile in, thinking that it's the end of the bull market, then it definitely could. So key levels we're looking for today is going to be pretty much for it to just stay as it is. You do not actually want this candle to close positive. If it closes positive on the day, then we don't move the trend. And if we don't move the trend, it's a much harder thing to actually try to move back up. You can end up creating an accumulation range, you can end up creating another break level, and then you can break that level, and then you can keep going down. So, you know, as it stands right now, we want to stay where we are. We will get conversion of this 1.38 level, which has been spiked. That'll get converted into higher time frame daily support. This level here at 1.32 will also, because that's been wicked through, will become a higher time frame support level. This level down here at 1.27 will become a higher time frame support level. So you can pretty much say that you end up with this cluster of higher time frame support plus a new trend to try and then actually get back up through everything you've got sitting up there. So it's it'll be interesting to see how that goes on the daily, but all it's really doing is confirming everything above 1.52 as resistance, but it's also building better confirmed support on everything below 1.38. So let's have a look at this from the weekly. So the weekly is going to create a hold level, and it's going to be below the range. So very much similar to what you just seen on the daily, is that if this closes down here, that 1.51, which is, you know, pretty close to 1.52, you know, that sort of level is going to become resistance on the weekly. So what you really need to do is you really need to see the daily bounce of trend lift the market cap up to get back above the trend and back into the range before the close of tomorrow. In other words, we need a Sunday pump. That's pretty much the gist of it. Yeah. Okay, let's have a look at, I think I've got the monthly. Yeah, and so as far as the monthly goes, the monthly actually looks fine. You know, so we hard closed the break of the range. We had a rejection off the trend and off the prior origin level, which was this 1.6, and we swept all of the liquidity from, or about half of the liquidity that would have existed back in that complete range. We never even got to the hold level, never actually retested the trend, and we're back up above the break level. Okay, so although that seems super vicious and super violent, it's actually entirely within the realms of the monthly range and the monthly trend. And if it's not really any different to sort of this area down here where it's swept halfway down into the accumulation range before it, you know, travel back up. If the month closes here or above, you actually get an arrayed uptrend. That is a strength uptrend, which is pretty hard to say that the market is strong after what you've just seen, but you know, that is what the chart says. So that's how that looks. What else we got? So daily on the DXY could be more pain looking at that, but we still haven't actually lost the horizontal levels. Yeah, so yeah, it's a absolutely vicious dive when you look at it. And it came back up and it rejected off, one of the very first origin levels that was created in the range. But it's still not actually the end of the world looking at that. It hasn't lost the levels. Now, if it comes back up, rejects off these trends at 341 and then continues to dive down, yeah, that's not good. But at this stage, the greater range on the daily is still holding. And same can be said for when we look at it from this direction. It would be more positive for it to push back up a bit before the end of the day, certainly. But has it lost that 3.5 origin? No, it hasn't. It's just below it, but it hasn't hard closed it. Has it lost the 3.38? No. Is it creating new support at 3.33? Yes. Did it hold the range trend? Yes. So, again, in actual fact, it's only kind of, it could just go up just a tiny bit and be back up above that range trend. So looking at that, I would say if it closes down like this for the day, then sure, it could bounce off the underside. So these are both possibilities. Nothing's hard closed, so what could it do? It could bounce off the underside of the range trend, come down again to test either of these ones at the bottom, and that would create a double bottom. Or it could just go back up above the range trend, close above it tomorrow, bounce off it, and travel up. What's pretty clear is that there's a relatively large air gap now, which is kind of the whole fast down, fast up thing, and fast up, fast down. Also, the actual main support trend is getting broken by this candle, and that trend is going to shift to the bottom of that. So it is developing more support down here. And yeah, you could see a up-down move or a down-up move, but there'd probably be a move if it closes in there. Like I say, it could be like a double bottom and then an up, or at the end of the day, there's nothing stopping it from breaking down further if it actually gets below the support. But for now, it's still really not that bad in the scheme of the entire range. I'd be really getting a bit worried if it starts to close below that 3.229 level, because then that's under so many of the main ranges that it's just going to die effectively. Let's have a look at this on the weekly. So weekly's pulling back up into the range. It's got time to go. It retested that range trend. So that's just, like I say, as brutal as it sounds, it's just kind of normal behavior. Me included, didn't really see that would come that quickly, but when you look at it, and I guess it's all hindsight trading. If you had an infinite amount of money, you'd just have orders sitting on all of these levels, and then you'd be capturing that kind of stuff. But all this really has to do to get back up above the main support is just close back up over 3.46 tomorrow. So we'll see if that happens. But failing that, it's still actually not in the worst place ever. It's still holding some of these ranges. And then, as you can see, the monthly move just played out really to the T. So this is what we looked at quite some time ago, was that actually quite some time ago, it was probably actually about 11 days ago. When we closed that candle right there, really warning bells should have gone off, because the entire market cap of risk assets had kind of come in sync with Bitcoin, and it was just odd that Bitcoin had not retraced and tested any of its lower levels. And the lower level on Bitcoin, when it hit down here, was 102. So when this candle closed, this thing went up, hit resistance and said, guess what, we've got these lower retests to do, and then came down, tested the levels, and bounced back up again. So there's some really odd time frames that kind of showed this better and more accurately as far as where it hit, like the 47 days and stuff like that. But where we run a risk on this one is that this could create a monthly hold, and if it creates a monthly hold, it is going down. Like it'll be coming down much bigger than what you've just seen. It may not be as fast as what you've just seen, but it will come out. So you'd have to come back to actually test this trend down here at like 2.79, or you'd have to come back to the hold level down in here at like 2.55, something like that. I mean, it could technically bounce off the wick, but that's arguably what that candle was doing. So but yeah, by the end of the month, have an alert on this. You want to be above 3.47. You do not want this closing like this. And realistically, you just want this candle to close up for the end of the month. If it doesn't close up for the end of the month, it's also a break of the trend. And that interior trend being broken, price will typically travel to the exterior trend at a minimum, or the hold levels. So I think by the end of October, you're either going to know you're in a bear market or you're not. Okay, let's have a look at Bitcoin. So Bitcoin on the daily, same thing really. It's losing this upper range, which is not ideal. Yeah, so losing that 113.893 level, or hard closing under that, not a good thing to be closing under that. But it's also basically erasing all of these interior trends. So when those trends are gone, you don't actually have that kind of resistance sitting above you anymore, and it hasn't lost the main trend. So it also hasn't lost this daily break down here. Right, so this is what would have got a lot of traders. Like if you're just trading in the daily range, it'd be very risky to have your stop loss just below here, below this prior daily range, because it is very often that they sweep into that range, into this area. So a lot of traders would have either had their stop loss sitting below this low, that 109.136, or they would have had it really conservatively down here at sort of that 107 area, which is two different ranges down. And then as you can see, that wick just went straight through it. So yeah, live and learn, markets can be brutal. So as far as what this close could do, the wick's good, we're still above the trend. If they push this down below trend in the next hour and 40 minutes, that's just nasty. But failing that, what they are doing is they're actually confirming 109.136 as a higher time frame resistance. It's still going to be protected by the trend. So if they go to try and do a dip down, they could hit these levels and then retrace back up within that 24-hour period. And once this is converted to an origin level, then I think these are all broken. These are all broken. That's not broken. So yeah, if they do convert this to an origin level and then bounce off it, although it's not what most people are probably expecting right now, it could go all the way back up to that 124.58 on the daily. And yeah, it has basically, 7 days to get up there before it really screws up the weekly, I think. So let's have a look at the 2-day. So 2-day close might be slightly below the interior. It's below the range trends. It's not ideal. It's not hard closed, thankfully. So really that means in the next 2 days it has to get back up above 112.499 to be back above those levels. Otherwise they get hard closed and they become resistance. It's not really actually, it hasn't even hard closed the range trend all the way back up here at 121. So yeah, you'll know pretty much in the next couple of days whether this thing is going to create some more resistance or whether it's going to pull back up. looking at the 4-day, it'd be nice to see this just sneak up just a little bit before the end of the day. But from a positive perspective, it's back up inside the range trends plural. It is below the prior broken trend, so it may try to just use that as resistance and then have another push down. It's not converting anything to higher time frame support, but yeah, if they push it down below the 110 area before the end of the day, that'd be pretty bearish. If they go down below 109.7 by the end of the day, that would be very bearish. But as it currently stands, it looks like it might just open roughly on the trend, kind of like what you see over here has happened before. And it could definitely move up from there. Funnily enough, that range trend that's above is about that 113.9 level, so it could just bounce off these and target that. You might get a little mini pump. We're not converting anything above to high time frame resistance either, unless, well, apart from that 124.539 level. So yeah, I think to reiterate, that 124.539 level could be the level, the creation of the bear market. Once we either hit that, spike above that, and maybe fail to close above that, then that could be it. But keep that one in the back of your mind just in case. And this is probably the most bearish time frame that there is. So it's 71D. I don't know why 71D and Trump events seem to line up across the charts, but this needs to close above 111,659.4 today to not create a hold level. Now it is the absolute weakest type of hold level. It's a single candle. We are not closing below the wick, so there's no real front side, back side in there. We are going to be sort of on the trend. So if there was ever a hold level that could break, that is it. But it's still pretty indicative of the kind of thing you would see before either you go bounce the trend, go up to the upside, sweep the liquidity, and then dump back down. If they push this down, what would you have to be? 109.2. If they do push this down before the end of the day and it opens on the wrong side of that interior trend, then these 93, 99 levels, all of those really low levels do definitely start to come back into play. And weekly needs to be back up above 112,100, because otherwise you're on the wrong side of all the trends and you've created a hold level, and that never ends well. So just saying, does not end well. What we could do is get back up a little higher before the end of the week, and then we can bounce. But yeah, put some alerts on that weekly chart, because that could really not end well. To convert this 107,212 into weekly support, it really has to stay above there for another week, and that's don't think we're so this is not weekly resistance yet. So I think the key thing to point out here is just that it needs to be above 124,539 by the end of next week. And that means that what we get on the bottom here is support, and what we don't get on the top there is resistance on a weekly level. Okay. Let's go monthly. So the monthly move is done. So that was that 102. That was that retest of the hard close break level. And it's back up above the interior trend. It's still below the resistance. Lots of time to go on this. And if it stays blue like that for the rest of the month, it's going to move the trend, but it'll all come down to the wick. Is that wick supportive, or is it just going to continue down? So it could, of course, go all the way back up. Oops. that set my alert off. Might just have to okay. And the 3 month. Yeah, I mean the 3 month basically hit the trend. The 3 month hasn't really done its rejection. Its rejection would actually be to come down to this 93,570 area. But like there's so much time to go on that 3 month candle. It could end up mooning before she breaks trend, but if it just goes sideways, it probably can't go sideways, because if it stays where it is, the monthly will end up breaking trend and then you could have a dip. Certainly if it just somehow does go sideways for 3 months, then you'll be then breaking that trend and then you'll have a dip. But one way or another, things need to go up. Okay, let's have a look at SOL. So on the daily, yeah, it's really not a good looking close at this stage. So the prior broken trend, which is this little dashed line through here, it's just done a retest of that just in the last hour or so. And that is a positive sign. However, it looks like it's going to potentially close underneath the range trend above, which is 183. And it looks like it's possibly even going to close under that 177.170. So if it does that, it can reject off the underside of the break and then move down to try and find support. But where it could be quite tricky is that the longer term support trend, which was not broken by yesterday's candle because it started from the top side, is getting broken by today's candle. So that longer term trend may flip to the bottom here, and when that happens, you might actually have support. So it could come down, test something like the 173. This would be probably the most bullish dip you'd see. It could come down, test like the 173 area, and then bounce back up to the range trend, which sort of gets you into that 180s again, 183, etc. And because it hasn't technically hard closed the 185 range, it could get back into that range quite easily. And then this level here, which is the 190s, that's not a complete range, so that's not going to stop it. It would basically be 196 would be the first real level of resistance that would come into play if they want to push that price up. So yeah, and if we got back to 196 within a day, then we've pretty much solved the issues with the weekly, I think. So the close looks really bad, but it is going to shift all of this trend resistance, which it's violated. It's going to shift it to the underside, and yeah, it could actually bounce. And that would be one of those, magical tweets that comes out, and then suddenly the price rockets. That's the world we're in now. We're back into tweet TA. So looking at this from the 4-day perspective, it hasn't actually lost the 4-day trend. So that's also something that sort of says to me, we might bounce. We are not creating any higher time frame support, but we're also not creating or losing that 196 level on the 4-day. So yeah, from the perspective of this, there's really, I know this is going to sound really weird with what everyone's just been through, but there is really nothing to stop this on a 4-day structure from actually going back up to 230. It could just go retest the broken trend, and that, to do a retest of the broken trend is like 227 or higher. And I think that would require obviously some kind of catalyst. It's not just going to travel up like that, but yeah, it hasn't technically lost the exterior trend. It hasn't broken the middle interior. It breaks the top interior. It could do a retest, and it's not technically hard closing even levels like 196. So your daily could get back to 196. Your 4-day could get above 196. So from a time frame perspective, it's not looking atrocious. they might drag it out for a bit. Like say they bounce off the backside of the break level, which is like 177.170. So say we close under that, because that's kind of the closest key level at the moment. If we close under that, maybe they bounce around. Maybe they go down and dive the trend a little bit. But the real indication will be if they don't revisit 161, because if they don't do that, then they're making 161 into higher time frame support, and then the chances are that they'll look to bounce off that 161 level and travel up. And the real bird's nest of resistance on this is still up around the 250s area, 240 to 250. So it looks a little bearish. It could be a bad close, but they've definitely left the pathway open to go up. Okay, and so looking at the 47-day, 243 rejection, which was the break level, which was converted to an origin level. Trend is down here. So this trend is not anchored off that candle. This trend was here based off this prior candle that was from May. So rejecting from the upper level, coming down, hitting the break level, and hitting the trend and bouncing back up. So where this time frame does get a little bearish is that we're creating a hold level on the wick here at 185.296, and we're creating another hold level here at 204.235. So we're also bouncing off the body of this hold level at 173.490. If we chuck a basic fib on that candle, it should try to get back to 202.899. Now, 202.889, so 202.889 is roughly heading into the body of the top side hold candle. So there's a lot of symmetry here for this thing to maybe push back up to there and then reject back to the trend. That'd be nasty again, because obviously I think a lot of people were going to jump in if it starts to move up from the 170s and it starts heading towards the 200s. Whereas I think what you should do if you're in a position is look to de-risk if you actually get back to these 200s, because if it rejects off that hold level, and this is sort of like a medium risk hold, because it is closing below the wick of the candle, but it has also hit that break level down the bottom. So as far as range violation goes, the top side of this range is 256.914, and the bottom side is here at 147.588. So it has tagged the bottom side. It didn't quite hit the top side. So you'd have to argue that there is a chance that even if this travels back up to the 202, to be honest, even at the 185.2, it can reject off that wick. So anywhere in that area, it could have another move back to the trend, and the trend would have to hold. And the problem with this is, like, it could do it any time in the next 47 days. It could even sweep up to these upper levels and then do it. So, but yeah, the structure is there on a high time frame for this to really struggle to get out of this area, or at least have to fight that that hold level. So a little bit bearish there. And then the 71-day, and so on the 71-day, we have high time frame resistance at 193. We've hit that trend support I think the most bullish thing that could happen, and just to throw this out there because this really could happen in the next hour, is that we close over the top of this Hulk candle, which is 179.591, and we close over the top of that trend, or at least in proximity where we can open on the other side of the trend, which is 182. And if that actually happens, and then you get one of those magical positive tweets come out, then you will have opened a candle above all of the 71-day resistance. You would have created a 71-day hold level. That's probably going to push right through that lower time frame stuff. And, just like the monthly just absolutely slammed all of the dailies, this can do it in the other direction. And prior Trump pumps, etc., for some bizarre reason, have all come around these 70 timeframes. So make of that what you will. It's probably the same as taking trades based on the moon, but it's there, and it's always happened, and we seem to be moving up now, so who knows. So yep, that is all we have there. Weekly, still got a day to go. Nothing is hard closed. Yeah, it's pretty. I mean, basically, it came down and retested the range trend. So yeah, never would have thought you'd see that happen in a single candle. But hey, and yeah, we'll see how that goes tomorrow. Monthly has crept back up above the range trend, which was hard closed in the prior month. It came back down, it retested the main support trend. Like I say, 20 days to go, but there's no reason why that candle in the next 20 days couldn't be a positive candle based on what's going on. But we know we have these levels. If we do close down for the month, then these 190, 200 levels will become the next point at which the price is going to try to ladder downwards, and we're right in the middle, because effectively you've got this high, which kind of led to this low. This low is still technically a higher low compared to that low, and this is the middle. So, the question is, do you get a higher high from here? And if you do, it's just ranging, just really high time frame stuff. Okay, let's have a quick look at Tesla and ADA. Okay, so Tesla on the weekly, it still just looks like it's coming down to retest the range trends and the prior broken trend. I think what we said the other day was that you'd sort of be expecting this around that 394, 395 level. Doesn't look to have changed. Let's see if that looks any different on the daily. Yeah, so it's at the daily. It's kind of sitting at the daily trend now. Or is that the daily trend? I guess that's because the candle's closed. I don't really do too much with stocks. Markets. Oh yeah, market's closed. Okay, cool. So that's why the trend moved. Still wrapping my head around these automated systems. So yeah, the next candle could open on the wrong side of trend, and if that happens, it could come back down, and got a range trend there that it could bounce off. Got another daily range trend there that it could bounce off. So that's 405, 399. 3.6 and that level there at 388 would be something to retest on the daily. So that's pretty much a breakout level that hasn't had a retest. So that's 388. So that's a little bit lower than the, or 387.4. That's a little bit lower than the weekly retest level. And of course, the other option is it goes all the way back to the prior trend, but that would mean getting through that level. That would be in that 360 area, which effectively would be a complete retest of that break level and that breakout level. So that's actually probably that level. Yes, it is that level. So Tesla, basically 394, 387, 364, 354 would be real levels of interest. I think most of these other levels have been retested since close. So 345 has been retested. 338's been retested. Yeah. And our weekly trend, if it goes all the way down to the weekly trend, it's about 375. So here's our first untested weekly level, 367. And then that's kind of not been retested. That's definitely not been retested. 338. Yeah, I mean, if markets open and repeat, say structurally this opens and repeats the dump that you've just seen on crypto, the actual place that would target is probably 258. And I know that sounds really, really, really out of character because everyone is so bullish on this stuff, but you got this hold level down here that was created at the bottom of the range and it's never laddered the price. And you've got this weekly range trend coming through here, which is pretty close to it. You've got the one above that's not been retested since it was created. And you've got the same structure here where you've got a candle that was not a range, followed by range, not a range, not a range, followed by a range. So although the 388, so although all these levels should really be very good support levels, if they dump Tesla the way that they just dumped crypto, then your buys should be sitting down there at about 261 to 258, because that would be the wick. And that would be all the way down here and then back up again. And if you're worried about like long term, I probably wouldn't be worried about long term. You just, yeah, you could just ladder some entries at these levels, coming all the way down to here, and see what you get. You know, don't use leverage, just have buys. And what you might end up doing is catching the fact that, you know, markets are all kind of the same. It's just all of this dump kind of happened after the close, and what you might end up seeing is that when the markets open, you might just see the same thing play out on this. So yeah, see on that one. And ADA was the other one that people wanted me to have a look at. So Beta took an absolute nosedive. It ran into that entire cluster of support down below. It's come back up. I mean, it's closing back up above trends. It's not actually losing, although this is weekly, so it could change tomorrow. But at this stage, it's just one hell of a trend deviation and a liquidity sweep, and it's tested the very, very bottom of the range, which is, if you've watched a few of my videos, this is just really, really, really normal decision time. This is the base of your range. This is your range. Okay. This is the test. This is now make or break. It's either going to come here and basically go to 0, or it's going to find its way, and it won't be like a straight line like this probably, but or it's going to come to an all-time high, test the top, and then move up to create the next range. And that range could be a smaller accumulation range, followed by a bear market, where it goes down. Or it could be a sustainable range that goes and tests its bottom as well and then goes up. So it's hard to say what this will do. But looking at the volume through this section here, looking at the volume in there, whoever bought this, sure, they are in profits now, but not by much, and it might be a case that they want to push it up at least to that sort of, where's that 50%? They might want to push it up to at least that 50% area to unload it, and then move into that bear, which is kind of how ranging works, Start, huge push up, unload, liquidate. How greedy do we want to be? Do we want to sell it for more than that? In which case we come up here and we go up. As far as key levels go, you want to see the weekly get back up over that 0.7103. That'd be good, get above that break. It'd be really good to get above that next one, which is 7812. But this is really absolutely not out of the woods unless it gets back over that dollar mark, because all of that high time frame resistance starts at about the 92-cent area, and you've got untouched high time frame resistance sitting there at $1.10. So yeah, if you're in this and it starts to move up, you want to start getting out of it probably from 90 cents through to $1.10, and just keep an eye on the trend, see if it holds the trend. So it's kind of a big fall, moved up 50%, downtrending since. If you're day trading this, obviously it can be a little bit different. If you're watching daily levels, so it's very much just like the other tokens. It looks like it's going to close probably down for the day. I'd say that that's likely so that it can shift a trend. Let's see where that trend actually is. Let's go back here. Okay, let's go find our daily range. Could be down here somewhere. And not quite the right one. Let's just go one more. Okay, so there's our daily range. Yep, so we're below the trend. So much like all the others, closing this day down like this is not necessarily a bad thing, because these daily range trends running from the very original pump, they all shift to the bottom of that candle, and when they shift to the bottom of that candle, you've got the support of that. So it's possibly looking for Let's just see what that manually looks like. Yep, that's very much in line with where you see that wick went to back here and then there. So yeah, it could just be trying to flip, because like I said previously, it's way easier to let all these trends disintegrate by shifting that to the bottom side than it is to try and accumulate candles and accumulate candles and accumulate candles for what would have to be days and days and days on end to get back up above there. It's easier just to have one more day that closes down, but not as down as this. And therefore that shift creates that and it can bounce. So that seems to be what's going on there, like most things. Hopefully that sheds some light on Tesla and ADA, and like, subscribe, and all that kind of stuff. The goal was to get to 1,000 followers, but I think if anything, there's probably a lot of people that I shouldn't laugh, but there's probably a lot of people that are not so interested in crypto anymore after seeing what just happened. But no, this is what we trade in, and I think the idea, hopefully, of this channel is so that people can learn to see both sides of it rather than just the continuous bull posting that goes on so many other channels. It's actually mildly irritating to see people posting things that basically just get you to buy the top, and then there's huge dumps. And yeah, if you've been watching ADA on the daily, you know, if someone's bull posting and you're stuck under a downtrend, and your downtrend is a range, so it's actually getting more parabolic, then like seriously, unsubscribe, right? So that's it. If someone is bull posting and a token is doing this, then no one, unless they really are extremely good, could have known that it was going to do that. And like I ranted on at the start of this thing, there were, like, it's all good in hindsight, but looking at some of what's changed in the way this market is, or the way the mechanics of the market are now, to do with the amount of leverage and to do with people's trading accounts and maybe even this unified trading thing, and institutions which have huge amounts of money and lots of greed, I guess you could almost predict that we were going to be in for some kind of big, nasty sell-off. But at the same time, you had so many influencers out there talking about how it's going to be a super cycle and it's only up from here and the pullbacks will be smaller. And I must admit, even I sort of sat there thinking, yeah, I don't know if we can get back to this 107 level anymore, on BTC. And whereas if you're just focused on TA, you should have been expecting a pullback to that monthly 102 level all along, because it's just statistics. It just happens, so and likewise, unfollow anyone telling you that this is bullish, because it ain't. And if you can find someone who really genuinely predicted this dump before it happened, and got the levels right and everything, then tell me who they are and I'll start following them as well, because yeah, that was pretty impressive. All right, we'll catch you all again on the next one. Like and subscribe if you still exist in the crypto world, and yeah, and keep working on these tools as well, and hopefully they'll be at a acceptable point soon. And catch you again. Cheers. Bye.